The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. Well, I'll start the show today. I had a couple of requests to do this. This is a chart of numbers, of how numbers originated. I believe it comes from Stephen Skinner's book, Sacred Geometry. If you don't have that book and you have an interest in pattern recognition and harmony and geometry and stuff, you really should get that book. I think it's the best book ever written on sacred geometry. I've talked about it in here before, but it's a fabulous book. Stephen Skinner, and it is called Sacred Geometry. You can get it on Amazon for under $10 with about $2 for shipping. So it's something that you should have for your library if you like numbers, you know, and patterns and things like that. But as you can see here, when we're watching this little graph of the patterns, you'll notice that what's happened here is each of the numbers has one angle in it. Like 1 has an angle, 2 has 2 angles, 3 has 3 angles, all the way through. And when you finally get to 0, 0 has no angles. And of course that leads to how you find the circumference of a circle or an ellipse using either the golden mean, 1.618, or pi. But that's beyond mathematics that we need to worry about. We're just trying to find a place to either buy something or sell something. But this is how all the numbers originated. This is what Leonardo da Pisa, the Fibonacci, went to Egypt back in the 13th century. That led to his paper in 1242 called Liber Abaci, which basically means freedom from numbers, where they took you from Roman numerals to arithmetic numbers. And for that, he received something that was pretty much equivalent to the Nobel Peace Prize during that era. Of course, the Dark Ages followed right after that, so much of it was not attributed to him later, until much, much later in life. One of the interesting things about Pythagoras is he also went to Egypt and he studied there for 20 years. He literally had to go there in exile because he was so smart, and some of his things were so controversial to what was happening in the world, like the Earth being round versus flat, you know, things like that. And the fact that he knew that the moon was 250,000 miles from the Earth. This guy was really smart. Einstein said that there was God and there was man, and in between was Pythagoras. And Einstein thought that Pythagoras was probably one of the smartest men ever to, you know, to walk on the planet. So I think it's important just to see where these numbers come from, and you know, basically that's the type of thing that we're looking at when we're watching these things. Now, I would like to. I know this is not the commodity show, but we've got something happening in commodities, and we like to keep you know, at least our small part of our pulse onto what's going on in the markets. And I wanted to bring out a chart on live cattle that we've talked about several times before, because we've been watching this for quite some time, and you'll be able to see here, just as soon as I can get this posted, that we are right up at a 61% retracement now in the April cattle, up around this 62 level. We could get as high as 66 up at the 786, but right now there is an ABCD pattern coming in here. The thing is, we've got a big gap in here a couple days ago, and that may or may not be filled, but this should be an area where live cattle should run into some resistance. Now, you wouldn't necessarily have to sell it right here at 62. You could sell it at the low that we had yesterday, which would have been below 61. And if you do that, then the market would have to reverse and make an outside day to the upside in order to take you out. So your risk here would only be under $500 trading live cattle. And believe me, these things move quite a bit. As you can see on this chart, going from around Thanksgiving to right around the 26th of January, the market dropped $10,000. Now, I'm not going to say you can pay risk $500 to make 10,000, but that's the type of risk that you can get and the profit potential that is there if you have the patience, to go through it. So you want to be able to watch this. This is something that, really should be looking at, what's going on, I believe, at, see what happens. And we'll see. The trouble is we've got April cattle are getting ready to coming into delivery, and they're pretty much untradeable. So you really need to go to the June contract to look at that. That was brought to my attention by Mr. Z here in the room, and when we get to the break, I'll bring up the June cattle and take a look at that, because I believe they're a lot weaker. But we'll have to wait and see which happens with the cattle market. One of the questions that I've had this morning is about the gold market. We are very, very close to either a really significant, this is not news, but we're either very close to a significant sell-off, or we're getting close for the market to break out to the upside. My feeling is here, let me get this chart up so we can take a look at it here. We'll look at the hourly chart, I believe, and you can see that we've gone above the 61% retracement here, and we have a chance here. If we can, the only way you can get gold to make a breakout here, folks, is if we get above the 1225 level. That's the only way that I can see that right now. What we're doing now is that we are, basically testing the 61% retracement from the high that we made way back in early March. This is on a 30-minute chart. That came in pretty much spot on today at the 1199 level, and the market really does need a little bit of correction, because we've been up 10 days without a correction. We've got the ABCD pattern that's here, so it does look like it's that it wants to do that. Now, if we take a look at silver, and silver has actually been leading the market over gold, because what's happened with the silver is it hasn't backed off as much than gold did. I mean, silver hasn't even backed off at all. Now, we did take out yesterday's high in silver, but silver has not made the 61% retracement. Now, I want to bring this up and show it to you, because I think it's important to watch this spot here, because even though silver looks like it's been stronger, it is, in fact, has not made the 61% retracement. And we did take out yesterday's high by only a few cents, and that in itself should be a little scary here, especially after a 10-day run that we've had in silver. But longer term, I still think we've got a chance here in silver, but I believe, and also in gold, but I believe that the real test is going to come if we get this correction after this 10-day run that we've just had. We should look for a 3 to 5 day correction. That will give us some really good information about both gold and silver, because if we only back off to the 38% retracement over 3 to 5 days, that would take gold down to about the 1170 area. No, it's even higher than that. Hold on, that would be, let's put this up here so we can all see it, just to make sure I get the number right. I wasn't too far off, 1177, and that's about $20 from where we are now. If it takes 3 days to get there, that would be an ideal situation, because then you'll know that if it takes above the 1199 after it makes that retracement, then you know that it's getting ready to have some power. Longer term, I still think we have some type of a chance in the gold and silver for a long term. We've looked at that long term in gold. Let's just look at it one more time, because I still think it means a great deal, because we've held that number so long that it looks like that we could really have a big bull market if we can ever get gold moving. The reason why I say that, folks, is in bear markets, we had a high in gold, it was August of 2011, where we hit 1932. Now we're trading at around roughly 1196. And the 61% retracement from the low in 2008 came right in there at around that 1155 level. So we've held it 1, 2, 3, 4 times, and that should mean something. So this is why we're at this real critical level here, and it could really go. But boy, if we get below the if we get below the something really, my history just popped into my mind, something really funny I'll share with you in a minute. But if we get below the 1140 level, was actually 1130 level in the gold, then I think we're heading down to triple digits, down to the 960 level. I have to tell you a funny story. When I was saying, boy, we have to watch this, I was in Atlanta, Georgia in 1970 working for Eli Lilly, setting up a research grant at Grady Memorial Hospital. And I had to meet this doctor, and it was raining so hard when I got out of the hotel to get in the taxi. I got in the hotel, and I said, boy, is it raining hard. And the cab driver turned around, and he looked at me. He said, don't you ever call me boy, son. He said, this may be the South, but if things are changing. And I tried to tell him, I said, I didn't mean it that way, but he didn't take it that way. But I never forgot that. And when I mentioned it just now, it brought a memory back. So, oh, well, anyway, I have memories fleeting all the time, so we have to live through that. So we have to watch both gold and silver right now, because I think we're ready to turn down. Whether we do or not, we'll have to wait and see. Now, we have one other market that looks really interesting from well, this is more of a financial market than a commodity, but it's one of the biggest commodity markets, and that is, in fact, the Treasury notes. And this is the one, of course, that is in charge of our credit cards and loans and all that stuff. We have a really interesting pattern today after 13 days up, which we all know happens to be a Fibonacci number. But we have a beautiful pattern here to look at the short side of the market in the Treasury note market. You can see that if we have a low close today, somewhere below 129, that's going to leave a shooting star pattern, which is the most bearish of all the candle patterns. We can see each time we made a high back here, way back in October, we had a shooting star. We had another one in December, and then we had another one in February. And if we have one now, that would be very important, especially stopping right at the 61% retracement, 129.05. The high today was 10, I believe, 12, 129.12. And so if we close below 129, that would complete that pattern. And after 13 days up, that would give you a really strong indication that we are, in fact, looking at a pretty big correction coming in. It could be a major correction. Someone's asked a question about the Treasury notes, if this happens to be a head and shoulders pattern, and I don't see any indication that it's a head and shoulders pattern. I don't see any symmetry that you need between the left shoulder and the head and the right shoulder. I just don't see any of that. So it doesn't appear to be, well, in my opinion, it's not a head and shoulders pattern, so you have to look at something else. I think that 61% retracement is by far enough to look at, but that's what we really want to take a look at. I've had a request to take a look at the gold-silver index. Unfortunately, I think we're going to be coming up to break time here pretty soon, but maybe we'll get it right after the break. We've got the Dow down about 150, and gold is still up on the day.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartlys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we've got a caller. Our friend Danny from Atlanta, Georgia is on the line. Are you there, Danny?
Boy, I'm happy to talk to you, Larry.
Oh boy! actually, that guy reached into the back seat and grabbed my tie, and I was just a kid. I was still in my 20s, and I just turned 30, and it scared me. And then afterwards, he realized that I was just an old country boy from Indiana that didn't know what boy meant. But that was very, very, very scary for me. What can I do for you, my friend?
My question is, you went long gold at 47, and what's your strategy for when you think we're having a possible correction?
I sold it today at 11.96, and the reason for that is we went up to the that 61% retracement that I was watching that came in right around that 11.99 level. And if I'm wrong, it'll close strongly above $1,200, and I'll try to wait for retracement to get in. But after 10 days up like this, I can't chase it here. I might be wrong, but that's what my strategy happens to be right now. the one thing that I think we've got going for us, and I posted in the chart for the gold silver index, the XAU, and then I've also posted the gold bull bear index, the HUI, and both of those don't look nearly as positive as both gold and silver do. So a nice little pullback here would really set up a good buy. That's the way I see it. Whether I'm right or not, I don't know, but that's what I'm looking at.
All right, so you sold your entire position and you're looking for a retracement back towards 47?
Around 1177. I'd like to see that happen in a couple of days is what I'd like to see it. This is Wednesday, like maybe Monday. I'd be able to, if we could get gold down into that area, even if it's lower, even if it got down to 1160 or something, I would still be strongly interested in it. The problem that I face here is if the gold, takes off and makes, gets above the $1,200 level, then I'm looking at something that I made a mistake on. I have to find to get back in again.
Okay, you probably know this, but tomorrow the options expire on the April contract, and the sweet spot is 1,200, and then the contract itself expires on Tuesday.
Oh, yeah, that's good. Well, actually, that you brought back a lot of memories. One of my best trades was in a June contract of gold back in 1980 on its way down. And because it topped on January the 22nd, I believe, and it went from 865, went all the way down to 400. But I got $100 and some of that, which was a lot of money back in 1980. Well, it still is, but back then it was really a lot of money.
Okay, great.
Well, I hope that helps. We'll have to wait and see if it works, but that's what it looks like to me anyway.
Okay, great. Thanks, Larry. And I'll be looking for your friend down here.
Okay. Thanks a lot, Danny. I appreciate it.
Okay.
Okay. It's Danny from Atlanta, and boy, I tell you, there I go again with the boy. I really enjoy the Atlanta. I've had so many wonderful times down there with in the medical community. When I was with Lilly, I had to go there all the time to set up research grants for cephalosporin antibiotics, and it was a lot of fun. Met a lot of really nice people. Well, it's neither here nor there. Anyway, one of the doctors that I met there, his son actually works at the Mayo Clinic in Scottsdale, and I got to go in and visit him, about 2 years ago to talk to his father's passed away, of course, but I did get to visit with him, and it was a lot of memories anyway. Okay, get back to the markets here. Okay, we got a break coming up pretty soon, but I still think we can get one more in here without too much trouble, and that is I wanted to talk just a little bit about that New York Stock Exchange Index. We're backing off a little bit after a nice 8-day run here. We're having a pretty good correction, but not nearly as much as it could be. But the thing that's important here, folks, and this is really Mother God and country stuff. It goes back 55 years of working. If we get below the low we made on March the 12th. Actually, March the 11th, if we get below that low in the New York Stock Exchange Index at 10,655, we are going down, and we've made a major top in this market. And the reason why I can say that is, I can say it now because we have some divergence here, but we're still looking for a top, sometime in April. That's what it looks like to me. This is just a normal 3-day correction that we're having. So we'll take a little break, pay a few bills. We'll be right back. 877-927-6648.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open, even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have a caller from the heartland of California in the middle of the cattle country. Brent, are you there?
I am, Larry. How are you doing today?
I'm above ground and staying away from open graves, my friend. What can I do for you?
I didn't really get a chance to listen to the complete first half an hour. I'm not sure if you talked about the currencies at all. But
no, we were just, that was my next section, and I just posted a chart in the room. It's a 4-hour chart, 250-minute of the euro, and, you know, basically we're been very, very oversold, and we're correcting that oversold condition, and I believe we got a chance to get to that 112 level, which is where we broke down from, you know, big time, and I still believe we're heading towards the 99 level. Sometime in the next quarter would be my guess.
Yeah, it looked like it wanted to test that spike low in the dollar and then obviously the spike high then in the euro, the opposite. That we had back, I guess, when they had the whole Fed announcement thing that shook the market up a little bit.
I don't know if they're still waiting on something to do with Greece or not, because I don't follow the news that much. But what it looks like to me is that market is just making a really nice ABCD correction on the 4-hour chart, and it should get up to around near the 112 level and then start back down again. That's what it looks like to me. The weekly chart on this is so bearish with so many targets. This is probably one of the prettiest technical charts that I've seen. Well, I think they're all pretty, but this is one of the prettiest technical charts on the long-term weekly euro that says it's heading down to that 99 level. That's what it looks like to me.
Yeah, you've been awfully accurate with your calls on that, and I know you really like to trade it because of the patterns that it puts in. So, all right, thank you very much, Larry. I just, like I said, I didn't get a chance to catch the whole thing. I wasn't sure if you'd already talked about it.
No, I haven't, but thanks a lot for bringing it to my attention. It was next up. We must be on the same wavelength.
Apparently so. Well,
okay, thanks a lot, Brent.
All right, you take care, Larry.
You bet. We appreciate you calling in. It's Brent from Martinez, California, right in the middle of the cattle country in Central California. Okay, now let's go on to the next currency that I think we should take a look at that has been a tip-off that the dollar might be getting ready to have some type of problems when it got up to that 100 level. And that, of course, is the Japanese yen. And I want to bring this and show you because that Japanese yen has a GHI. What happened to J? There it is. Hold on just 1 second. There we go. I want to get this up here to show it on the long-term weekly. Well, we can show it on the daily too because it's done pretty much the same thing that the euro does, only backwards. And then we'll take a look at this one here. This is the yen on the dollar yen on the daily. And then we also want to look at on the weekly because that's the one that gives us the most information from a technical perspective. As you can see here, let me get this put into the room here on the weekly chart for the yen dollar. We got up to that 122 level about 3 months ago. And we have not even been able to take it out other than just very, very sporadically on early morning Sunday one night about 3 weeks ago. We hit 122 very quickly, and then we've been selling off pretty much ever since. Now, that's an important number because that's the 786 of the high from 2000, and it's also the 61% retracement from 1994. So that's a really big number at 122. Now, remember, the yen used to trade at around 360, so this is barely on the really, really long-term charts. This is barely a 38% retracement of the dollar yen. So we'll see now. Of course, we all know that, Japan has even more quantitative easing than we do because they said that they're going to just keep flooding it until they get inflation moving. It's really amazing. 30 years ago, inflation was the thing that everybody was deathly afraid of. I mean, it was scary. Of course, we had interest rates. T-bill rates were 13%, but now inflation is looked at as something good. Well, it may be, but when you get into the elderly, and I can attest to this because I happen to know some elderly people, it's not very much fun when you don't get much interest rate on your money, and then every time you go into the supermarket, you see prices going higher. I mean, eggs are $2.39 a dozen now. Last year they were $1.39 a dozen. So this is a big change for people on fixed incomes, and that's a tax that they have to pay. Unfortunately, they don't have enough voting power to change anything, but that's just neither here nor there. And I've just had a request from Mr. O'Brien that says, shut up, get off your soapbox, and talk about the markets. Now, he didn't say that, but that's what I should be doing anyway. Okay, the next one that I wanted to talk about today that I think is relatively important is the crude oil market because we've had a lot of talk here about oil going to $20, and believe me, folks, there's a chance that oil could get to $20. I don't think there's any problem with that, but right now we are in the midst of a rally. We've been looking at this now for let's just blow this up so we can see it here. We had some really nice cycles here that we were watching just a few weeks ago, and Yes, Marshall, there are people older than me quite a bit. Anyway, this just basically shows the basic cycle that we looked at here, which was nothing more than a 6-week cycle. And we've had a nice correction. Right now, we're in the midst of an 8-day run in crude oil. It's the best run that we've had since early February. This one is actually more shallow than the one we had in February, so there's still a strong potential that we could go down even farther in the crude oil. The important spot to watch here is if we get it above $54. That's another C720. It's another 15% higher than where it is now. Then there's a chance that we could get oil rallying, but it's going to have a lot of resistance. If we ever get to 75, it will have a huge amount of resistance at that point. From my perspective, it just looks just very, very bearish. I mean, if you look at the long-term chart here in crude oil, you're going to, I don't know why I'm spending so much time on commodities today. I think it's because they're so important. But anyway, if you look at the long-term chart here on crude, we broke below the 786 retracement at $51 a barrel. We went down and made a lower low down at 51 and change, 52.80 and change. But when we did that, we did not make new lows in gasoline futures, nor did we make new lows in heating oil. Both of those held up extremely well, and especially gasoline futures. They've held above the 382 relations retracement all during this little correction that we had a few weeks ago in the oil. So that's another positive sign for oil to continue to rally. But it's going to have a lot of trouble at $60, in my opinion, if we ever get to that level. I've had a request to talk about Apple for just a little bit. It seems to be the most popular stock in the world because everybody has some Apple, either here nor there. Just give me a second, and I will get this Apple chart up here, and hopefully we'll be able. There we go. We are down a little bit from the on the day here in Apple because there's a little selling coming in. I guess people don't realize that this stock can never go down. But we'll put up the chart here, and you'll see the long-term weekly chart tells us that we have a high probability of have made a top in Apple. And there's a long-term ABCD pattern there. There's a shorter ABCD on the weekly, as you can see. But the key here is that Apple, on the day that it made the high, did a shooting star pattern. And that is a very, very bearish pattern. That's the same pattern that we talked about at the start of the show with the Treasury notes. It got the same type of pattern, only it's on the daily chart. It's still a very, very negative pattern if we get notes to trade below 129 today, but that's still a little early in the game. But Apple, to me, looks like it has potential for a major top. I mean, folks, there is no one on Wall Street that is bearish Apple. I mean, it's 100%er. That's basically what you're looking at here. So who knows? We've had a request to look at the chart of Priceline Charlie in La Paz, Mexico. Someone just asked us to take a look at Priceline. We haven't looked at it since Charlie was on last week, and we'll see what's doing. It's heading down now. This is what I still think we're heading down to the $1,100 level. We're at $1,154. It's down $25 today. So that's this market's. This is a much weaker than market stock. So this is the trend is certainly down in Priceline. And as you can see, we had that little rally here just a few days ago, just last week, that got up to near the $1,200 level, $1,195. And if you drew in the ABCD on this pattern, you'll see that would take us just about to exactly the right price, that actually a little bit lower than where we want to, but close enough. And and the ratios are more important than the patterns, folk. Always remember that the ratios have more importance, because those are the ratios of mathematics and and sacred geometry. And the patterns that we're looking at are just simple patterns that should happen, but the numbers are the ones, the numbers are the ratios. In other words, a 618, 786, 127 and 1.618 are the more important things, to watch, when we're doing this. So keep that in mind when you're watching this. But right now, it looks like we're going to be looking at price line somewhere around $1,100 to $1,180 or $1,080 sometime in the next several weeks would be my guess. Someone's asked a question of whether I thought the market has made a high yet. This is just a little 3-day correction. Maybe it'll be a 5-day correction, but I think it's just acting normal. It's just correcting its normal stuff of being up 8 days and then has a correction. That's really what you're looking at. So I don't see any major reason here. The New York Stock Exchange still looks bearish. I mean, we're still below the highs we made last July. So, the 531 stocks that the people are looking at, the 500 stocks in the S&P, the NASDAQ stocks that are also in the S&P, and then also the Dow 30 stocks, that's basically what they're looking at. And then when you see these buyouts that everybody has, I mean, Kraft and Heinz, they have a big buyout going. I mean, I don't know if you know this or not, but Secretary of State Kerry is married to one of the Heinz heirs. He's a very sharp man, I guess, when it comes to picking his spouse. He doesn't have to worry about alimony, that's for sure. Okay, all right. Now we have one other question that someone asked us about here at Tiger TV, and that is the price of Tesla. And we'll just get this up and take a look at it, because here again we have a stock that is far, far weaker than the rest of the market, and it is down sharply today. Give me a second, and we'll put it in here. Take a look at it, but here we go. Tesla, we had an ABCD day down back on that March 11th day. The market couldn't even make more than a 3 or 4% correction, actually 5% correction, barely making a 382 retracement. And now what are we doing now? We gap down big today. And if this market closes anywhere near that, that's telling us that we're probably going to challenge the 1175 per share. The thing that's important about this chart for Tesla is if you look at that island reversal that we made back in September, we talked about that when it was happening, because the market was there for 2 weeks in that trading range between 275 and 290, and then it gaps down, really sharply in September. On September the 15th, the market gapped down, had a huge down day, a little bit of a rally, and that started the big move down. But folks, pay attention to those island reversals with chart patterns, because that's a really important fact. What happens is, people get all excited, and they bring all the buyers in at one time, and then all of a sudden, everybody that's bought it over the last 2 weeks is sitting there holding a dead bird in their hand, and they don't know what to do, and that's what happens. It keeps going down. This is the same pattern that we had at Apple a year and a half ago, a little more than, it must have been 2 years ago, I guess, when it was up at the 703 level. Stayed there for well over 8 days with everybody bullish, and and it was a great stock because it dropped by 50% and then went back and made new highs. So, but if you had to set with it for that 2 years, I mean, a year or 18 months when it was going down, that's not a good feeling, folks. This is not what you like to do. I have one other comment to make, and that is about Mr. Buffett. They had him on today about his investment in Heinz and Kraft, which the thing going, and his comment was, "I will hold this stock forever." Well, he's 86 years old, so forever is probably not as long as it is for some of your younger folks. But Mr. Buffett did the same thing with silver in 1997. He came on and he said he owned, I think it was 10% of the above ground silver in the world. He physically owned it. And silver rallied, I think, about $2 an ounce. And when Berkshire Hathaway's report came out a month later, guess how much silver they had? You're right, none. So you got to be careful what people say. What they say and what they do are two different things. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and I'm going to repost a chart that I posted earlier because I think it's the most important one for the next coming days, and that's the chart of the Treasury notes. These are the 10-year notes traded at the CME, and what I've done here is I've marked off the 3 other times when we had these candlestick patterns there's a couple others on there, but I just did the one that I'm looking at. This is the shooting star pattern, but all we need to do is to get the Treasury notes to close below 129 today, and that would complete this shooting star pattern. It would also be below the 61% retracement, and this is a very important spot. This is the largest thing that they trade in the commodity markets. This is far bigger than the bonds, and far bigger than the stock indices. So this is the one that determines our interest rates on mortgages and things like that, your cars and credit cards. So this is very, very important, and we'll see if this is going to be it. I know there's a lot of people that believe that these are going to go to zero, like they have in Germany and some other places, Switzerland and Nigeria and a few of the other countries. But we'll have to just wait and see. I'm just looking at the chart. That's all I can tell you. But if we close, at 129.08 to 129.10, then this would not be a shooting star pattern. Now, if you're bearish, you'd like to see it close as low as possible. Ideally, it would close at 128.24, something like that. That would really put the pattern into play. So that would tell you that today's high would be very important. Now, from a mathematical point of view, just from counting days, from the low we made back on March the 10th, we were up 13 days, 13 trading days, which happens to be a Fibonacci number. And the other time we had something like this happen was back in December. We had a 13-day run, and then the market sold off again. So this is just a really important pattern. I can't, I'm going to be emphatic as I can about it, because this is the kind that you really like to wait and see, that you can see that they're coming up very, very nicely to a spot and with patterns and everything. This is mother, God, and country stuff. So keep an eye on these Treasury notes. They look like they're ready to go down. They're certainly overbought over the last 2 weeks, and we're in a downtrend because we have a lower top from way back in January. So this is the kind of thing that you'd like to be looking at. If you do moving averages and things like that, watch the 9-period moving average that Basil talks about, because if we get below that, that would be another indication that we could be looking at something to the downside. We got the Dow down 200 points, and the notes and bonds are not up today. And usually there's a flight to quality there, and that is in fact not happening today, which is another indication that possibly notes and bonds are getting ready to turn around and go lower. We'll have to wait and see. But this note chart is just a real classical chart of the things that we look at with pattern recognition. It's just as clear as you can possibly see. I've had a request to take a look at a gold stock, American Barrick, and I'll see if we have time to get that up here. I'm pretty sure we do, if we get it refreshed enough. Here again, you're going to see a stock that has been much, much weaker than the rest of the market. And, it just literally looks like it's made some kind of a double bottom down in here. But frankly, I wouldn't take a look at it, especially where we are in gold right now. I'd watch American Barrick maybe at around $10 a share if we get back down to that level. So it looks like that's it. So that's it for today, folks. Live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. markets. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.